Good morning, dear learners. I, Dr. Vandana Sonkar, Assistant Professor, Faculty of Commerce, Banaras Hindu University, welcome you all to the 11th module of my course on financial literacy. Here, in this particular module, we'll be going to discuss about the market instruments and market accounts. In the lecture number 51, we'll be going to discuss about the Demat account and the trading account. In the previous lectures of our module, we also had the discussion that for the purpose of trading into the financial market, you need to have at least minimum 3 different categories of account. One is the Demat account, second the trading account, and one is the bank account. We in the previous discussion have already discussed how one can open a bank account from any bank, whether it is a commercial or government sector bank. Now, in this particular lecture, we'll be going to discuss about the meaning of Demat account and trading account, and we'll be also going to discuss the other aspects related with the Demat and trading account. So, let us have a look what will be the different contents that we'll be discussing in this particular lecture. So, here we'll be going to discuss about the history and the evolution of the Demat account and trading account. We'll be also going to cover the topic of the features of the Demat account and the Demat account number and the DP ID number. We'll be also going to discuss what are the various charges that are associated with the Demat account and the trading with the help of the Demat account, and we'll be going to understand how does the Demat account works for the purpose of trading into the financial market. And we'll be also going to discuss the various aspects related with the trading account and what an individual investor needs for the purpose of opening the trading account and Demat account. And we'll be finally going to compare the various points of differences between the Demat and the trading account. So, let us have a look on the history and evolution of Demat and trading account. So, basically the concept of dematerialized and trading account was revolutionized in India after the new economic policy in the year 1991. Prior to this, investors used to trade into the market with the help of the floor trading procedure. In such cases, they need to use the physical share certificates for the purpose of transfer, and which was a very cumbersome as well as risky and time consuming procedure. After the new economic policy for the purpose of modernizing and streamlining the security market, the SEBI along with the National Stock Exchange introduced the dematerialized system in the year 1996. Though its legislative groundwork already had begun in the year 1992 with the enactment of the Depositories Act. The first depository in India was the National Security Depository Limited, NSDL. We have already talked about the NSDL and CDSL, those who performed the job of providing the depository services to the investors into the market. Here, the depository NSDL was established in the year 1996, allowing the investor to use electronic accounts for holding and settling their shares certificate transfer. This was soon followed by the establishment of one more depository in our country, that is the CDSL, in the year 1999. The trading account, on the other hand, became more prominent with the growth of the online trading platforms that was introduced by the major stock exchanges like the BSE and the NSE during the year of 1990s to the early 2000 of our country. So, basically the trading account become more popular among the investor for the purpose of trading online into the stock market from the year 1990s till the year 2000 due to the various advantages of the online trading. Now, these platforms basically allow the investor to trade securities in an electronic form, eliminating the need of physical trading floor and keeping the physical share certificate for the purpose of transferring it from one investor to the another in the market. Although similar systems were adopted earlier in the other countries like Japan, where the financial services agencies promoted to move forward the electronic trading in the early 1980s, India's full-fledged adoption of the Demat and trading account system came later, but has since become an integral part of the modern investing. So, both the Demat and trading account plays a very important role for the investor by providing them the various platforms and facilities for trading in an online mode in the financial market and making the procedure much less complex as well as less time consuming and efficient for the individual investor. Now, let us discuss the conceptual details related with the Demat account. Basically, a Demat account, that is a short form of the dematerialized account of the investor, is an electronic account that is held by the investor for the purpose of using the various types of shares and security in an electronic form. So, share securities are basically kept in a digital form into the Demat account instead of the physical share certificate by the investor. So, it basically allows them to buy, sell and hold the financial instrument such as the equities, stocks, bonds, mutual funds and government securities with ease and security, as well as the safety of the share certificate also becomes very easy and convenient for the investor with the help of the Demat account. This was introduced in the year 1996, as we have already discussed, and it also eliminates the risk and inconveniences that was associated with the physical floor trading practices, and the maintenance of the physical share certificate may also be very difficult, such as there may be different kind of loss of theft or damage to the share certificate that can affect the holdings of an investor. So, basically the Demat account works like a bank for an investor, and it keeps the share certificates in an online mode for the shareholders and the investors, and whenever they trade into the market, the transfer of the online certificates are done with the help of the depositories. So, basically the depository like NSDL and CDSL operate through the various intermediaries, that is the trading account and the brokers in the market, and these depository participants, they make it possible for the investor to trade online into the financial system. So, basically Demat account is very essential for anyone who wants to invest or trade into the Indian stock market. Now, let us discuss the various features of the Demat account. So, it provides you an easy access, so quick and easy access to all your investments, and your different kind of statements can be taken with the help of the net banking system and the access of the Demat account. So, you can understand very easily in which of the shares you have invested your money, what are the different stocks are there, list of stocks are there in which your holdings are. It helps you in the easy dematerialization of the security. The depository participants, basically they helps to convert all the physical certificates into the electronic form and vice versa, as the may be there for the investor, and hence it makes an easy dematerialization of the security possible for the investor. It helps in receiving the stock dividend and benefits on your investment. That means quick and easy methods to receive the benefits such as the dividend, interest or refund may be used with the help of the Demat account. So, basically there are a system of auto credit into the account. So, whenever there will be any kind of benefit, it will be received in your account automatically. It also uses electronic clearing services for updating the investor's account with the stock splits, bonus issues, right issues, public issues, etc. So, all these different types of adjustments are made on a quick and easy basis with the help of the Demat account. Then it also makes it possible to share your transfer easily with the different type of other buyers and sellers in the market. So transfer of share has become much easier as well as time saving with the use of a demat account. It also helps in maintaining the liquidity of share, because the exchange has become now simpler, faster and more convenient. So to sell the shares into the market and take your cash back from your investment, this procedure has become very easier with the help of the demat account. It also helps you to take loan against your security by opening a demat account. One can also avail loan against the securities that is held in their account. Then there is a service of freezing the demat account. So one can freeze a certain amount or type of their demat account securities for a certain period of time. So this will eventually going to stop the transfer of money from any or debit or credit card into your account for a specific time period, and this can also help you to maintain safety and security in your various types of transactions. So these are the various types of benefits that one can have with the help of the demat account. Now let us know about the different types of demat account that one can open for the purpose of trading into the stock market. So basically an investor can opt for opening any kind of demat account that we are going to discuss. The first one is the regular demat account. All the Indian citizens who are residing in the country's nation's border, within the nation's border, they can open a regular demat account. So all the resident Indians are eligible for opening the regular demat account. Then comes the repatriable demat account. So non-resident Indian can open the demat account of repatriable type, that is those NRIs who are having any NRE bank account, they can link their NRE bank account with the demat account and they can open a repatriable demat account. So one can transfer money from the overseas through such accounts if it is linked with the NRE bank account, that is the non-resident external bank account. Then comes the non-repatriable demat account. So non-repatriable account is also for the non-resident Indians. The non-repatriable accounts basically helps in the cases where the NRIs cannot use to transfer the fund from abroad. So any individual who has to link their NRO bank account to own and separate the different type of transactions that they are trading into the demat account, they can open the non-repatriable demat account. So those customers who are holding demats account, they need not to open a trading account to buy or sell the securities from the stock market. They can directly do this practice with the help of the NRO bank account, while respective depository and depository participant may regulate the demat account. So a trading account basically follows the regulations that are mandated by the Security Exchange Board of India. So in case of the non-repatriable demat account, the NRO bank account is required, whereas in case of the repatriable demat account, the NRE bank account is required. Now let us understand about the demat account number and the DPID. What do we mean by the demat account number and the DPID? Basically, demat account number is the number which is a 16-digit number and it is divided into two parts. The first 8 digits represents the depository participant identification number, whereas the remaining 8 digits are the client ID. So it is a unique number which is provided to the investor together by adding the DPID and the client ID to ensure and secure the accurate handling of their dematerialized security into the demat account. So every investor who opens a demat account, they are assigned a unique demat account number which is crucial for all the securities related transaction into the stock market by the investor. So basically here two different types of numbers are added together. One is the 8 digits that represent the depository identification number, and the second, that is the remaining 8 digits, are the client ID that are added together for the purpose of getting a 16-digit number of Demat account number that can help the client to ensure the accurate handling of dematerialized security into the stock market. Now, let us understand what do we mean by the DPID. As we have discussed that Demat account number is a combination of the DPID and the client ID. So, we need to understand what do we mean by DPID. So, basically DPID is a unique identifier that is issued to each depository participant, and the participant could be a registered bank, a broking firm, or a financial institution. So, basically it is issued by the depository participant to any of the broker who is helping the investor by opening a trading account for them and finally making the transactions possible in the stock market. So, this ID basically helps to identify the specific intermediary, that is the registered bank, broking firm, or financial institution through which the investor has opened their Demat account and trading account in the market. So, it basically forms the 8 digit of the investor's full Demat account number, while the remaining is the unique client ID that is provided to an investor, as we have discussed in the previous slide. So, DPID is commonly used for the purpose of various financial transactions and verification process, including the dematerialization of shares, share transfer, account linking, and ensuring secure and efficient handling of the security. So, DPID is provided to the intermediaries, those who are acting on behalf of the investor into the stock market. Now, let us discuss the various types of Demat account charges that are associated with the Demat account, and in every transaction what different kind of fee and charges an investor need to pay, we will discuss in this particular part. So, while opening a Demat account is often free, in some of the cases, such as we have discussed about the various types of the Demat accounts. So, we had discussed there are full brokerage services, there are some discounting brokerage services. So, there are services in case of the discounting brokerage where the opening of Demat account is almost free, often free, whereas in case of full servicing brokerage it may be possible there may be some kind of charges associated with the account opening of the investor. So, investors first should be aware about the several charges that are associated with maintaining and operating the Demat account for them. These charges may vary across the brokerage firms and banks depending on their individual pricing policy. So, suppose that if there is any discounting brokerage service, then they may be providing this particular facility free of cost, that is the maintenance of the Demat account and opening of the Demat account will be free. In case of the full servicing brokerage services, they can charge some amount for the maintenance and opening of the Demat account for the individual customers. Now, the primary cost that is associated with the Demat account is the AMC, that is the annual maintenance charge, which is levied for the purpose of ensuring the smooth operation of the account. The Security Exchange Board of India has set revised guidelines effective from the June 1st, 2019 for basic service Demat account charges. So, this also lays some regulations and guidelines with the help of which you can have awareness about the various types of charges that must be imposed on your Demat account. As per the guidelines, no AMC is applicable for the debt securities for up to rupees 1 lakh, and a maximum charge of rupees 100 applies to when the holdings are between from 1 lakh to the 2 lakh of rupees amount. Now, another fee that is associated with the Demat account is the custodian fee. So this is also a common fee which is charged on an annual basis as a one-time fee by the depository participant, and it is paid directly to the various depository participant, that is the NSDL or the CDSL. So the next fee is the custodian fee. Additionally, some dematerialization and rematerialization charges may be imposed as the percentage of the share value whenever the securities are converted between electronic and physical form. So beyond these, investors may also find out some other charges associated with the demat account, such as credit charges, taxes, cess, or rejected instruction charges, and other operational fee may also be there. So before choosing your demat account partner, you must be aware of the various types of charges associated with the opening, maintenance, and the transaction cost related with the demat account, and then you should choose your depository participant and the intermediary with the help of which you will be trading into the stock market. Now, let us understand how does a demat account work. So basically, a demat account used to store the share certificate in an electronic form. So they basically, after the purchase of the securities by the investor in the market, convert the share securities into the electronic form and store it into a demat account. So first you need to log in for the purpose of trading with the help of your demat account. So the investor logs into their linked trading account and demat account, which is obviously connected with the bank account for the purpose of making the transaction possible. After that, placement of order is done. Whenever a buy or sell order is placed through the trading account, it is forwarded to the depository participant to the relevant stock exchanges like the NSE or BSE. After that, order matching is done. So the stock exchanges basically matches the order with the opposite one. That is, if you have placed an order to buy, then it is matched with sell, and if you have placed an order to sell the securities, then it is matched with the buy, and if a matching buy order is found, the transaction is finally initiated. After that, clearing and settlement procedure starts. So in the clearing and settlement procedure, the clearing houses basically facilitates the transaction. The seller's demat account is debited and the buyer's demat account is credited with the number of share certificates that they have sold or purchased in the stock market. After that, cross depository settlements are done. So the buyers and seller, they can have the services of different depository, or even with different depositories like NSDL and CDSL, they can have some other intermediaries also. So despite of taking the different demat account partners, that is the depository participant, they can have a cross depository settlement. So the system basically ensures the seamless transfer of security from one depository participant to the another depository participant for the purpose of settling the transaction in the market. Now, the next part of the lecture is the trading account. We have discussed about the demat account and how it works, how you can log in into the demat account and place an order. Now let us discuss the trading account. What do we mean by the trading account? So basically, it is a specialized account that is used to execute trades in various financial markets. So for the purpose of purchasing equities, bonds, stocks, options, commodities, and many other type of financial instrument, you can take the help of trading account for the purpose of placing an order. It acts as a medium between the individual investor or an entity and the stock exchanges or the brokerage firms. So the brokerage firms that are appointed, or you can say that are registered with the stock exchanges, they help the individual investor by opening their trading account, and on the behalf of the individual investor, they start trading into the market. So this account basically allows the investors to buy and sell sell the securities in the stock exchanges according to their financial goals, whether the goals are long-term or short-term investment or trading into the financial market. So, in simple terms, we can define that the trading account basically is an investment account that contains securities, stocks and other holdings of the investor. So, it is an essential tool for the individuals who want to invest into the financial market. It offers a platform and resources that are needed to participate into the trading of security, and thereby the investor can very easily make their investment portfolio by investing into the shares and securities with the help of the trading account. So, basically it is very crucial for everyone, those who want to invest into the financial market. It also helps into the research and development, and with the help of the risk analysis that is involved into the investment procedure, they can very easily make some informed investment decision with the help of the trading account. So, now let us discuss why we need a trading account. What are the various reasons that the investor must have a trading account? So, basically it acts as a gateway to the financial market, enabling the participation into the equities, bonds, commodities and currency trading. It allows the individuals to buy and sell the securities in real time through the online platforms or trading terminals. It empowers the investors to capitalize on market movements as well as to react quickly accordingly to the fluctuations of prices, as well as the trading account provide access to a wide range of investment opportunities, that is the stocks, bonds, commodities, currency and other type of financial instruments that are available in the financial market. So, across the different classes that are present into the financial market, it provides an opportunity and access to invest into any of these. It also helps in the portfolio diversification. You can, on the basis of risk analysis, diversify your risk and select different classes of asset for the purpose of ensuring the mitigation of risk and maximizing the profit potential. So, management of risk and enhancement of returns can be done with the help of the trading account. Finally, it is essential for anyone who is interested to actively trade or invest their money into the Indian financial market. So, these are the various needs of the trading account for an individual investor. Now, let us discuss the various features of the trading account. If we talk about the trading platform features, the trading account basically provides access to a user-friendly online or mobile platform that allows the investor to place the various orders related with the buying and selling of the securities. So, basically it helps you by guiding with the various research and analysis, as well as by providing you real time market data. So, the various features that the trading platform has, it makes it convenient for the investor to choose from the different type of investment avenues that are available to them. It also helps in accessing the market information. So, trading accounts provides the market data in real time, including the stock prices, charts, market news and many more, to ensure that the traders must make informed decisions and choices. It works as a research and analysis tool. So, they offer access to the research tools, technical analysis and financial news, so as to help the investor to make wise investment decision. It helps in the execution of the orders. Once the trader places the order, the trading account, with the help of the demat account on the trader's behalf, executes the order by matching and selling and buying the orders into the financial market. So, it executes the trades at the prevailing market price and confirms the transaction on behalf of the traders. After that, it helps in getting the margin trading. That means some of the trading account may also offer you margin tradings that enables the investor to borrow funds from broker to make trades using their existing securities as a collateral security. Then there are various type of orders that an investor can make with the help of the trading account, such as market order, limit order, stop loss order, and many more. This can enable the investor to set various type of conditions for buying and selling of security according to their demand and supply and fluctuation of prices in the stock market. It also provides customer supports. That means trading account provide not only the access of a trading platform, this also provides customer service and support system that can assist into the account related queries of the investor, can also help to minimize, or you can say addressing the various technical issues and trading related questions of the investors. Now let us discuss the various types of trading accounts. So we have multiple categories of trading accounts, such as equity trading account, that is used for buying and selling the equity shares in the stock market. It allows participation in the ownership of the company by investing your money into the equities. So it can be basically the type of trading account that can help you to get ownership into the company, but it cannot be used for IPOs or the commodity trading. So for example, buying shares of Tata Motors or Infosys with the help of the Zerodha platform or ICICI Direct. Then comes the commodity trading account. Commodity trading accounts enables the investor to trade into the various types of commodities, such as gold, silver, crude oil or agricultural product. So it basically operates through the commodity exchanges like MCX or NSDEX. The various examples may be trading gold futures through a commodity brokers like Angel One or Motilal Oswal. Then there is online trading account. It, as the name suggests, it allows the investor to trade electronically via internet or mobile platforms, and it offers real-time access and quick execution and convenience in the process of trading of security to the investor. The example in such a case may be placing trading orders or placing the trade related transaction with the help of Grow app, Upstocks or Zerodha Kite or mobile app, with the help of which you can invest into the market. Then comes the offline trading account. Some of the investor may not feel it safe and convenient to place their order with the help of online trading account. So they can choose the method of manual placing of order through a broker via phone, in person or email. So they can take the offline trading account also. This is suitable for those who are not very tech savvy and they prefer personal assistance for the purpose of placing their order into the stock market. So calling your HDFC Security Relationship Manager to place a buy or sell order may be an example of offline trading account. Then comes two-in-one trading account. It combines the Demat account as well as the trading account. The various facilities are given under the one account to the investors. So basically it simplifies the process of buying and selling of security. For example, Zerodha, that offers the two-in-one account setup to the investor for opening their trading account. Then three-in-one trading accounts are also there. So it integrates the bank account, trading account and Demat account. So seamless experience for the fund transfer and trading is given to the investor with the help of such kind of account. So ICICI Direct, HDFC Securities, Kotak Securities may offer this facility to the investor, but they may also charge a higher amount of fee as compared to the other services as we have discussed in the previous slide. Then comes the discount trading account. It offers the low cost trade with limited services to their consumer and best suited for the experienced traders, those who do not require any guidance and advisory support from the market. Then comes the next one, that is the full service trading account. The full service trading account basically provides the reports and guidance and the services to the consumer, that is the investor, with the help of portfolio advisory and personal assistant. So research and analysis is done and portfolio advisory services are provided in the full service trading account to the investor. So this kind of account is very convenient and you can say beneficial for the first time investors, that is the beginners or investors who need to have some personal finance advisory services for investing into the market. So the platforms like Sharekhan, Motilal Oswal, LDVIS offer full service account to the customers. Then comes the all-in-one trading account, a unified platform that invests into the stocks, mutual fund and commodities. Such kind of platform is known as the all-in-one trading account. It offers diversified investment portfolio option to the investor with the help of a single interface. So Paytm Money, HDFC Sky provides such kind of all-in-one trading platforms to the investor. Now, let us discuss the eligibility criteria that is required to open a trading account. So, your age must be above the 18 years. You must be an age of 18 years for opening your trading account with the help of the brokerage firm. After that, you must have a PAN card number with you. So, PAN card number is mandatory for opening the trading account and it is basically issued by the Income Tax Authority of India for monitoring the financial transaction and financial status of an individual and their documentation for the purpose of having the knowledge of their financial transaction. Then address proof is required. So any kind of address proof such as Aadhaar card, passport, voter ID, driving license, these can help you in verifying your address. A bank account is required. A linked bank account with the trading account is required for the purpose of transferring fund for every transaction. So most of the brokerage firm may ask a cancelled check or a bank statement as a proof of having a bank account. Then your income and net worth must also be within the eligibility criteria. So for the purpose of determining the trading limit, the net worth and the income details of the investor is also provided. You should have a minimum of 10,000 rupees of balance in your trading account for the purpose of trading into the security market. Then KYC compliance are required. The KYC norms are a prerequisite for the purpose of trading into the financial market. Now, how you can open a trading account? For that, first you need to choose a brokerage firm. So you need to analyze the cost and charges as well as the facilities that is given by any brokerage firm to the customer, and as per the expenses associated and the facilities and the utilities that you can derive from the brokerage firm, you can choose any of the suitable brokerage firm for opening your trading account. After that, you need to gather all the required documentation such as your address proof, your banking details and other utility bills that are required to verify your identity must be produced to the brokers. After that, you need to visit the broker's website or you can also contact them. So you can open an account with the help of signing up on the website of the brokerage firm, or alternatively you can visit their physical office or you can call them with the help of a phone and you can ask for the opening of your trading account. Then you need to complete the application form by clicking on the open an account link. The form will be downloaded. You need to provide all the information and detail related with your address, related with your name, financial information and employment details, and you need to agree the terms and condition, and finally you can submit the required documents and you need to submit your form. After that, you need to fund your account. For once your application is approved, you need to deposit funds into your trading account so as to make it possible the transactions to complete into the market. So this can usually be done with the help of the bank transfer or credit or debit card or other accepted payment method. After that, you need to choose your trading platform. So after funding your account, trading platform is required to be chosen by the investor, and finally after choosing your platform, you can start trading. So you need to be sure that the platform and market before you are going to start trading, so as to make an informed decision. You need to be sure about every details about the platform and the market. Now let us discuss the last topic, that is the demat account versus the trading account. If we talk about the various differences between the demat and the trading account, so on the various basis we have differentiated the two concepts. The first one is the meaning. So basically a demat account is a kind of account that used to store financial securities like bond, mutual fund, ETFs into electronic format, whereas trading account is used to execute buy and sell of transaction in the stock market. The primary function of the demat account is to hold the shares and securities in a digital form in a safe manner, whereas the trading account acts as a intermediary or platform to buy and sell the orders of the investor in the market. If we talk about the analogy, it is like a locker. The demat account is like a locker where your shares are stored securely, whereas the trading account is like a shopping cart for you, or a gateway through which you can place your order. If we talk about the difference on the basis of uses, it is used after buying share to hold them, whereas the trading account is used to place the trade order in the stock exchanges like NSE and BSE. The transaction rule may also be a differentiating criteria. So demat account basically helps you by debiting or crediting your securities after the transaction, whereas the trading account facilitates an execution of the buy and sell the trades in time. If we talk about the ownership record, so yes, the demat accounts hold the security in the investor name, whereas in case of trading account, it is just an intermediary or interface for executing transactions, so no ownership records are kept by the trading account. If we talk about the difference on the basis of interlinking, so demat account is linked with both the trading account and bank account. Again, the trading account is also linked with the demat account and the bank account for the purpose of making your transaction complete. If we discuss the differences on the basis of regulating authority, the demat account is regulated by depositories like NSDL and CDSL, whereas the trading account is regulated by SEBI. If we talk about the providers, then for demat account, depository participants are the providers such as the HDFCs, ICICI. So different type of banks and brokers may provide the depository participant services, and in case of the trading account, it is provided by brokers and banks that are registered with the SEBI, such as the Upstocks or Angel One. So this is all about the various differences. Now next point of difference is on the basis of the requirement. So basically demat account is required to store and hold the stock and mutual funds in the electronic form, and here the trading account is required to place the orders related with the buy and sell of equities and other securities. For example, in case of the demat account, after buying 100 shares of Reliance, the shares are stored in the demat account for the investor, whereas when we place the order with the help of trading account, then the Reliance share, it is done with the help of the trading platform. Fee and charges. So the depository participant may include some account opening charges and annual maintenance charges and custodian fee with the opening of the demat account, and in case of the trading account, brokerage, transaction charges, some GST and STT may be involved. So can one exist without the other? So obviously no. The trading account and demat account both are an essential part of trading into the stock market, and both the accounts are needed by the investor to complete their transaction into the stock market. So with this, we come to an end of this lecture. Thank you.